Hello, and welcome to TTWO Investment. This analysis is for TTWO Interactive Software on NASDAQ as of 31st of July 2026 with a share price of $242. The full report is on TTWO.ca. TTWO owns Grand Theft Auto, a Category of 1 franchise, and the GTA 6th launch on 19 November 2026 drives the driver score to 78, which carries the medium and long-term calls to buy. But the short-term signal is hold. The stock is fair near 52-week highs, heading into 7 August earnings, with no entry path yet open. A hold now. A buy to accumulate on weakness for the medium and long term. Start with the business, because the quality here is real. TTWO is one of the world's largest video game publishers, built on 3 labels: Rockstar, home of Grand Theft Auto and Red Dead Redemption; 2K, home of NBA 2K, Civilization and Borderlands; and Zynga in mobile. Its distinguishing asset is ownership of Grand Theft Auto, arguably the single most valuable intellectual property in interactive entertainment. GTA 5 has sold over 215 million units, alongside a 29-title pipeline. That earns a business quality score of 70. The catch is that trailing earnings are in a pre-launch trough, so the usual profit lenses read low today. Now, the reason the longer horizons are a buy. TTWO's next 2 years are dominated by one dated event, the Grand Theft Auto 6 launch, locked for the 19th of November and reaffirmed by management in July, the most anticipated entertainment launch on record. That lifts the driver score to 78, a clear tailwind. Management guided fiscal 27 net bookings to $8 to $8.2 billion, deliberately below the street's roughly $9.3 billion, a conservative bar the launch can beat. The probability-weighted fair value sits near $277, about 15% above the price, which is what carries medium and long to buy. Here is why the short-term call is only a hold. Trailing earnings are negative, so the honest lenses are enterprise value to sales at about 7 times and forward price to earnings on normalized post-launch profit. On the normalized blend, the stock trades near 25.5 times against a warranted multiple of 24, a ratio of about 1.06, which reads fair, scoring 57. On the nearer fiscal 27 stub year, it is genuinely rich at nearly 36 times, and that is precisely why no horizon amplifies to a strong buy. Analysts still see meaningful room. A $288 consensus, about 19% above the price. The risks weigh at least as loudly as the tailwinds. The first and biggest is a 4th delay of Grand Theft Auto 6 past the 19th of November. The franchise has already slipped 3 times, and another slip would push the whole earnings step change out a year and puncture the pre-launch premium. That is the bear case. A fall to about $188, down 22%. The second is that expectations are already elevated. 45 buy ratings against 0 sells is an extremely one-sided crowd, a mild contrarian caution. The third is valuation on a pre-launch earnings trough. You are paying up at highs for profit that mostly lands in fiscal 28, and an $80 price backlash or Game Pass style subscription pressure could erode the premium unit model over time. Now weigh the risk against the reward. The bull case is roughly 36% above today. The base case, the most likely, about 18%, and the bear case a fall of about 22%. So you are risking about 22 to make 36. So, our call on TTWO Interactive Software on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by TTWO Investment at TTWO.ca. The link to the full report is in the notes below. Have a great day.